Welcome to the Real Estate Show on KMED. May 28th is our day. Pete Belcastro with you here today. You know, we get together with you once a week here on KMED to talk about all sorts of real estate-related issues and topics. I'm a real estate broker with John L. Scott in Southern Oregon. And, you know, one of the things we've learned since we've been doing this show for almost 7 years is the real estate market has really changed from a few years ago. My goodness, everything about it, whether you're buying, whether you're selling, whether you're renting, whether you're investing in real estate in Southern Oregon, things have really changed and really changed, obviously, I think, for the better. Well, today here on the show, Guy Giles, he's the he's the guy at Bank 34 Mortgage in Southern Oregon, and he's a resident mortgage guy. Thanks for being here today, and how are you doing, by the way?
Man, we're busy.
Yeah?
Same thing that I always say when I get on the radio. I don't know when it's going to slow down.
Well, I mean, that's good. I mean, I think that's good, too. That's good. I mean, that's a good sign there. Rates for people. I mean, it's so interesting. Every week when I go to the John L. Scott, the office meeting, and they talk about, the interest rates and things like that, and it's hovering around that 3.5, 3.6% range. Is that what you're seeing, too? I mean, is that what's out there for people?
Yeah, I mean, it really just depends on the program. If you're looking at a government loan, they're in the real low threes right now, and actually the conventional loans being the regular 20% down, 5 to 20% down loans, they're a little bit on the higher side, between 3.7 and 4%. I mean, usually 3.7, 3.8. You can get them at 3.6 with a little bit of points, but just kind of depends on. I mean, there's just a big range. I mean, if you have a 4 FICO score, it's going to be a whole lot different rate than you're going to get if you have an 850.
You're going over those FICO scores and all that kind of thing. What is the minimum score someone's going to come to you? Do you think right now that you can get somebody into a loan right now?
Well, you can go all the way down to 580 on some of the government stuff. You're really going to want about a 620 for your conventional loans. But the reality is, even if you can, I don't want to be the guy running around saying, hey, I can do a 580 credit score. I can, but is that necessarily the best
and is that
rate
what you want?
in the program?
Right.
Yeah. So just to say you can do it might just be, hey, we take a look at your credit report, see what we can work on. There's a reason generally that you have a 580 credit score if you do.
I think last time you were here, you were saying that you were just engulfed in a lot of VA loans, VA loans. This time around, what is the majority of the loans that you're seeing come through Bank 34 right now?
I'm still attracting a lot of VAs, which is cool. I love helping veterans get into houses. I mean, that's them and first time home buyers. But right now, actually, it's been a little bit of a shift to more conventional loans. I always have a little bit of government stuff and a little bit of everything, but I do try to focus a lot on VA loans.
Yeah. Well, that's good. Well, Brad Bennington is the CEO of the Southern Oregon Builders Association. Brad, also a regular on our show. And first of all, it's nice to see you here, Memorial Day weekend. What are your plans? You doing anything good this weekend?
Howdy. What in the heck are we doing here? We ought to be in a ski boat somewhere down in Shasta Lake. What are we doing here?
Speaking of Shasta Lake, I just came through there, by the way, and it's really remarkable. We drove to Reno and back, and it's remarkable how much. I did it a year ago also when it was so dry, and how much water there is coming still in the streams, in the mountain snow there in that part of California. It's really just remarkable, including Shasta Lake, which is almost full.
Yeah, the fun thing for me about that, Pete, is the fact that all these really smart scientists guys says, it's going to take 9 years to fill the lake back up.
No.
So next year the lake's full, and it's like, I'll be darned, we're surprised. But,
well, we're so interested because a year ago we were talking about what in the world of water we were in a drought.
Yes.
We knew that the reservoirs were going to be empty. And look, a year later, how Mother Nature has taken care of that. Where we haven't even talked about it on any of our shows. But of course, you want to use water wisely. What do you think? We're talking about with Guy here. What do you think regarding the interest rates and driving what's going on out there? Now, to me, I don't think that interest rates are going to go up as we're seeing, because if they do, don't you think, Brad, the whole housing market is going to come crashing down? So I think these rates are going to stay here for some time. Is that driving what's happening in new construction and in a lot of these sales, do you think?
Answer to that, Pete, Guy and I just got back from an economic summit today where we had national economist Paul Bishop address the Rogue Valley Association of Realtors and talk about a lot of the metrics and dynamics that have to do with both sides of the economy, the monetary policy, what that's looking like, and then give us, some historical context. And so there's really no one size fits all. What we do know is that interest rates for the foreseeable future they have been low. For the foreseeable future, they're going to stay low.
They're going to stay low, aren't they?
And so, if you're someone who is, if you're trying to find a place to rent, one of the things that was kind of interesting was they had the results of a poll of people that rented, and it asked them a couple of different questions. And one of the questions is, do you think you could afford to buy a home? And 85% of the people that they polled that were renters said, no, we don't think we could.
We could not afford it. Not afford it. Okay.
Right. But the reality is at the income point where most people are at, if you can afford the income to service your rent
check
with these low interest rates, there's a pretty darn good chance that you can service the debt on a mortgage if you can just figure out how to get into it. So, and the same sample group also identified home ownership as being important to them. So I think what we know is the home building industry is still very important to our economy. New home purchases or existing home purchases are a very important component. And as far as the dynamics of whether the interest rates are going to go up a quarter of a point or a half a point, within the next 6 months or so, I don't think that's functionally going to change very much. At least that's what I would think.
Mm-hmm. Well, you're probably right on that. You think that's true?
Yeah, and I think the reality is if we do see a little bit of a bump in interest rates, it's going to be because the economy is doing a little bit better. And I think we still got a little bit of a hill to climb when it comes to the economy, not just here but all over the world. But as far as that goes, that'll help the buyers, at that point anyway. So if they go up a little bit, it's going to mean that the overall health of the economy is getting a little bit stronger. So it won't be the end of the world, I guess.
Yeah.
There'll be some other compensating factors.
So you both now went to the economic forum, right? This week that
Yes,
was held
we did.
earlier this week. Both of you were there, right? You were there. And I assume there was a pretty good crowd of people there also.
By golly, there was.
There was. What else comes out of something like that? The thing that's about the National Association of Realtors I found is that they have a whole research department, and these guys and girls who do that, they come up with they do some amazing statistical information that is fascinating, to someone like me.
Yeah.
You guys, as they do this. So you guys are pretty optimistic right now. This is going to continue. You see that the home building the same way. I go through East Medford anyway, and there's a lot of stuff going on.
Well, Guy made some really good observations while we were there and asked some good questions of Mr. Bishop, Dr. Bishop. But where it all comes down to where we live locally, what you just said is true. We have a tremendous amount of activity here right now.
Yeah.
We have more people wanting to move here that can find property here, and this is pretty true in all of Oregon right now. Oregon has 36 counties in it. Oregon is and this came up during the summit today. Oregon has a very unusual set of circumstances in as much as, even though it's a fairly large state, the federal government owns over half of it.
Yeah.
So you can't build there, can't live there. The county governments own another big chunk. The city governments own another big chunk. And the actual amount of land that you can actually develop and do anything with in Oregon is really small.
That's true, yes.
It's, I'm out of this really big state. So that's the first thing. And then the second thing is we have the most restrictive and difficult to observe land use laws in the entire United States. So the metrics here look different than, say, if you wanted to move to Montana or Arizona, where you can basically just go and buy a piece of property and build something on it and be happy. So Oregon has a shortage right now of buildable lots. We don't necessarily have a shortage of buildable land, but buildable lots. So if you want to come here, buy a lot, have somebody build a house for you, it's going to be a little bit more difficult. And as you hear, we've got lots and lots of people that want to come here and live in Southern Oregon.
Well, you're right. At our John L. Scott office meetings, it's agent after agent get up and saying, I have buyers seeking this, buyers looking for this, buyers looking for this. You think, well, geez, why can't you find something for them? And the problem is that the inventory is still not sufficient to meet that demand that's there.
Yep.
And you're right. I didn't think it was going to be as intense as it is, Brad. But I agree with you now. The people wanting to come here, if it's 40% of what the sales going on. And by the way, we'll have next week. We hope we'll have maybe probably 2 weeks. We'll have the latest those MLS stats from March, April, and May. Which are generally the three busiest real estate months of the year.
Yeah.
I think it's going to be just stunning how much business has actually gone on.
Yeah. Well, I know what I hear from the builders, and it's pretty much the same for all of them, is they're running as hard as they can to keep up. They're looking for other subcontractors. They're trying to hire more skilled labor. We just had, I testified to the Medford City Council last week. They hired a new, we asked them to hire a new building inspector, and they did.
Really?
We're going to ask them to hire another one.
This is the city of Medford now?
City
you're
of
talking
Medford.
about?
Yeah.
And why? Why? I mean, what do you need? They probably have a bunch of them already. They can't keep up with this?
Correct.
Seriously? Are you serious? They can't keep up with it?
I'm dead serious. Yeah, we need.
Right.
We're going to need to have them hire another planner. People have no idea how much paperwork, just the sheer volume of paperwork that developers have to comply with to get a project through.
Yeah,
and
I believe
and
that.
the velocity of the project can go no faster than the velocity of the paperwork. So the slower the paperwork goes, the slower the project, and that's something that's just a reality. I can tell you, I know that you're going to be having Kelly Matting on your show here in a little bit. And I will tell you that we are so grateful for the support that the county gives us and the support that Kelly Matting gives us. They really work very, very hard to keep our paperwork going through smoothly, quickly.
Now, you're on the Jackson County Planning Commission. You're also, I know, on the Jacksonville City Council. As you talked about the land use laws in Oregon, and every people who come here, certainly new people who come here, and again,
they're shocked.
If 40% of our sales, I keep coming back to this, whether it's rural properties or in wherever, if 40% of the sales happening are new people coming here, well, they're clueless as to
they're shocked.
Our land use laws, our world, our et cetera, especially those in rural properties, are in for a shock. Many of them.
Yeah. Well, of course, if they're buying a new, not lived in home, where the home has just been built and all they have to do is buy it and move into it, that's pretty painless. But for people that find that one special piece of property that they want to build their dream home on to retire or what have you, and they begin to get a look behind the scenes at the volume of paperwork and compliance and reports and everything else that the developers have to do, they just shake their heads and say, "How do you guys do this?
Yeah.
How can you possibly survive in this kind of regulated environment?" And so, sometimes we ask ourselves the same question.
Well, there's a lot going on. Guy Giles, what do you think you would have to do? At this point, the people who are moving here that you deal with, are they all baby boomers like myself who are retiring here? Is that what you're seeing mostly? Or who are these new? Because we're getting a lot of new people coming in here.
I think probably 70 to 80% are baby boomers that are just
retiring.
Yeah, just ready to retire. And I think that's what's going to drive our market for a while because they don't have another recession in them. They're ready to sell their house. And even if things turn a little bit for the worse, I think it's going to keep our market strong here for a while. I'm always kind of trying to look ahead and say, hey, what could throw a wrench in this? And it's like, well, is it poor lending? Well, there's not really an appetite for poor lending anymore. So we're not going to have some hyperinflation. I think what's going on with our values is real because we have so many people moving into the market. And it was like that in 2006, 2007. But the difference was all of the
lending,
for lack of a better word,
was bad, right?
It was horrible lending.
I couldn't go in today and get a false loan from you, could I? There's just, or anybody.
Nope.
False information.
Definitely not for me. Maybe from somebody.
But nobody. You can't do that, can you anymore? All the rules.
No,
I was at a closing the other day, and you used to close in about 20 minutes. Now it takes probably double the time. There's so many more paperwork to sign. I was really surprised with the new consumer protection laws.
And I'm not a huge government guy. Everybody that knows me knows that I'm not a huge government guy, and probably every lender in the world will go against what I'm going to say right now.
Oh, okay.
A lot of the disclosures that came out with the Frank Dodd were actually
consumer
really
protection stuff.
Yeah, it was a pain when I first started going through it with them, but there's a lot of information, and you and I talked about this before the show a little bit. We take for granted that people know,
right? Yep, absolutely.
And it's nice to be able to just sit there and personally go over disclosures, and that's why you shouldn't use Quicken. You should come see me.
Right. Okay.
But there's my only plug that I'll ever do.
All right.
But
all right.
Just sit down face to face and go through these disclosures with somebody that knows what they're doing.
Well, I agree with you on one thing, that I think if you're going to get a loan, you better sit down face to face with somebody, because it just, I don't know. I don't like doing business with a phone. I guess. Especially something big like this. I want to be able to come down to your office and say, hey, I want to see you face to face.
Right, and somebody that's kind of personally vested in you, and you finish, and plus they know where to come throw a rock at your building if you do them wrong.
Yeah.
So I'm meeting some more folks from out of town today. baby boomers getting ready to buy in Ashland that are moving back from Hawaii. So that shows how nice it is here if you're moving here from Hawaii.
Yeah.
But, sit down face to face, shake hands. And we talked about doing it online. And then I was like, no, let's just meet face to face. So if we can, we try.
Well, there's just a lot of activity going on. Like I say, I can't wait to see those stats come out because March, April, and May, what we usually think are those busy months, are certainly going to bear that out, I think, because it's, again, you look at the, but we still have that gap. We're still outselling the available inventory, the new inventory that's replacing it. Even though, Brad Bennington, even though you're building a lot of new homes, it's still not enough, or the types of homes or whatever, we're still not keeping up with it, I guess, is the bottom line.
We'd appreciate it if you'd build a few more, Brad.
Yeah. Hey, let's do it. We'll just wave our magic wand, man.
Get those guys out there. They got to work harder. They're not working hard enough is what's the problem is.
Yeah, crack that whip.
Hey, the Real Estate Show rolls on. We're with Guy Giles from Bank 34 Mortgage and Brad Bennington of the Southern Oregon Builders Association. Talking all sorts of things here on the Real Estate Show. We're coming right back, by the way, to KMED, AM 1440 and FM 106.7 right after this. The Real Estate Show continues here on KMED. May 28th is our day. It's Memorial Day weekend. And Pete Belcastro with you here, and hope you're going to go out and make something happen and enjoy this kickoff to summer of 2016. It's a whole lot better than it was a year ago. I mean, there's a lot more water. First of all, we're going to be able to play in it this year, which is going to be a really cool thing. You know, it is. I mean, last year it's pretty sad. I was at Hyatt Lake, Howard Prairie. They're like almost 80% full right now, and I don't know if they're going to fill them up. But
get that ski boat out and start burning up that $2 a gallon gasoline.
And the docks at Hyatt Lake, at Howard Prairie were actually underwater. I mean, the docks were actually on the water.
Cool.
Because last year they were on the land. Anyway, that's it's going to be a terrific summer. Certainly recreation around, and whatever you do is please be safe as you go. Well, we're talking here today with Brad Bennington, the CEO of the Southern Oregon Builders Association, and Guy Giles from Bank 34 Mortgage here on the Real Estate Show as we head into summer. Is summer a busy time, Guy? Does the mortgage business, is it seasonal kind of thing? Do you heat up in the spring and cool off in the summer kind of thing, or is that pretty constant year round, do you think?
I think the last 2 years definitely it's been constant.
This year round.
Yeah, we haven't had a slowdown. I can look back year over year, and I'm doing more volume every year, but just on a month to month basis, I don't even hardly know what month it is right now. We're working so many hours.
Yeah.
But it's I noticed it a lot last year that we did not slow down. I don't mean just this last one, but literally this is the second year in a row that I really didn't feel a slump at all. What's
interesting about the mortgage world is, in terms of our show, since we started in 2009, is that at one point there, of course, most of the sales were distressed properties, but it seemed like everybody was getting FHA loans. And I remember you saying now over time, that's really reversed in most people. Most loans you see are really conventional type loans.
Yeah, unless you have a poor credit score, kind of borrowing that extra 1.5% to get you into a conventional loan. I really try to get, my heart is to get people into the right program the first time, and I don't want to get them into an FHA loan if they have a way to get into something that's conventional. And they're 3% down conventional
because
loans
it's better now. The conventional loan is better. Is that what you're saying?
It really is. And unless your credit score is really poor, you might as well get into a conventional one because that mortgage insurance will go away eventually.
Yeah.
But if you have a poor credit score, the rates are so darn low on the FHA. So sometimes it's not a bad option, especially if you're not going to be in the house forever, if it's kind of how you're going to get started. And that's what it was designed for.
And I think what really has surprised me more than anything is that USDA loans, the rural development loans, which are good, outside of the Medford Central Point urban area, they've seemed to, which is a program, by the way, funded by the borrowers and not the taxpayers, it's kind of fallen off. No, it's kind of fallen off, hasn't it?
It's gone. I don't mean gone, but I haven't done a USDA loan in probably 2 years.
Why do you think that is? I mean, is a conventional loan so much better than a USDA loan? Is that what's happened?
Part of the reason I wasn't doing it for a while was that NHF grant program that was around. So you could actually get grant money through U.S. Bank to make up your down payment. That has gone away at this point. So they're back to, USDA really is the 100%. Is the 100% when the problem is there's income limits on it. And one of the good parts about the program, or good or bad, is they're very restrictive on debt to income ratios. So it's a very low defaulting loan because of that, but it's hard to fit into that bucket. So with our house prices rising
And the
like
way
they
the
are,
market is, it's just no longer a viable kind of option.
yeah, but by the time you can fit into that bucket, then you can't afford a house if your debt to income's right. And then if you make enough money, then you make too much money for the program.
Can't do it.
So they are changing the rules though. They're going to lower the mortgage insurance or the upfront fee, I think, down to 1%.
Because it was they went 2% loan fee on it.
It was
to
even
pay
more
for
than
it.
that. It was almost 3%.
Oh, really?
So yeah,
okay.
and so they're lowering that. They're lowering the mortgage insurance, the monthly on it too. So it'll become more attractive whether or not people can fit into that bucket. You know, I mean, it's like West Medford doesn't fit in, but Ashland does. Well, nobody's going to be able to get a USDA loan in Ashland.
In a USDA loan there. Well, that's interesting how that's changed, isn't it? The market there. What about new construction loaning? We've been hearing all sorts of stories over the weeks and months from different people, from builders who have been here and yourself and lenders around. Most of them seem to be that the builders are building the houses and spec houses and that kind of thing.
Yeah, if you want to do a true construction loan, we have one. Frankly, that's not kind of my bucket that I live in. So, I would probably refer you off to somebody that I trust.
Okay.
Because there's good people and bad people that do those loans, and I may dive into them a little bit deeper, but it's definitely an option. But like Brock, I know he's a buddy of mine. He's funding these.
Well, how are they funding them? Brad, I was going to ask Brad that. What do you hear from the builders? Who we've had on our show, etc. They're building stuff. I mean, they're building multi units and things like that. Are they funding these themselves, or are they getting the loans for them?
So the question you're asking me is how are builders financing construction
How is
projects?
all this new construction that we're seeing in East Medford, for example, being funded?
Yeah. So we call that AD&C money.
AD&C.
AD&C, Acquisition, Development, and Construction Funds.
All right.
So back in the day, back in the good old days, a developer could go in and buy a piece of property, and typically the lender would loan you at a 70-30 ratio. So let's say you wanted to do a $10 million project. You'd come up with a $3 million piece of land. You'd take that into the lender and you'd show them your plans and what you're going to do, and they'd give you a letter of credit and a commitment for the $10 million or for the $7 million that they would loan you to do the project.
Okay.
Yeah, $10 million project. And so that would, like, for instance, that might look like five $200,000 houses.
Okay.
For instance, not 10 million goes pretty fast. But anyway. But that all went away when our industry fell off the edge of a cliff. The lenders, because they were told to, the federal regulators said, we do not want you issuing any more real estate backed paper, period.
Okay.
And we're devaluing, and the paper that you already have, we're devaluing at 50%. So whatever amount of paper you have, we're going to beat you over the head with it and make you get rid of it, and then all the hilarity ensued after that.
That's where all these bankruptcies and all these developments and plots gone.
You had a lot of otherwise solvent and financially conservative builders and developers basically put out of business by the federal government.
Welcome.
Imagine that. So getting back to your question, it's like where are builders getting their money from? Now that things are getting a little bit more settled as far as the economy, people, and when I talk about people, I'm talking about people in the finance community, because normal people like you and me don't count. Our opinion in $2 will get you a cup of coffee.
No one cares. That's true.
Guys might be worth more, but anyway. But the lenders, the lending community, they're saying, okay, we think things are a little bit better. So if you are a developer and if you're financially and otherwise pretty good shape, you can go visit with a lender, or just say People's Bank, for instance, or it might be Bank of the Cascades, or it might be Evergreen Federal. And you bring in your project, but again, just as with personal loans, the level of scrutiny is much higher than it used to be. They're really looking at what your debt ratio is. They're really looking at the project. They're looking at what their exposure is. And if you're good enough and solid enough, then they'll loan you money to go out and build something. But they're still very skittish about what we call spec building. Spec meaning speculative.
Right.
right?
I'm going to build it and somebody will buy it.
Right. So
What
one
do you- okay,
one
go-
wa- so
all
right.
go
So
ahead.
one way is you go to a lender, you get the money, you build. The second way is the customer comes to you and they've already got their own money, but what they
Okay.
need is they need somebody to build, and maybe they even need somebody with some land. So they might go to somebody like Hayden Homes, or they might go to somebody like Mahar Homes or Mahar Brothers or Polished Construction and say, I've got $10 million, but I need a builder and I need some land. Can we make a deal? So
Can we
that's
do it
where
that way?
so the customer brings their own money to the table.
Do you recommend one type of financing of new construction over another? I mean, or are all those things that you're describing pretty equal?
Most of your listeners are going to fall in the category of either A, they're going to buy a pre-built product from somebody.
Pre-built.
Pre-built.
A spec home.
They're going to buy a spec,
Okay.
or they're going to talk to somebody like Sam Sarich up there in Innsbruck
Right.
Ridge,
And do it custom for yourself.
and they're going to buy a piece of property, and it'll be a design build project.
And both of them work.
Sure, they do.
I mean, there's not one better than the other, really,
Nope.
is there? Yeah.
Nope, just whatever fits you.
It's kind of like the end product. You want the end product to be the best you can. All right, we've got one more segment to go. We're with Brad Bennington, CEO of the Home Builders. Also with Guy Giles from Bank 34 Mortgage. The Real Estate Show rolls on, continues here on KMED right after this. Real Estate Show continues here on KMED, this Memorial Day weekend of 2016. Pete Belcastro with you. Don't forget, for any real estate information, I'll be happy to talk with you anytime. You can call me at 621-7036. All that information is at realestateshoworegon.com, where you can also find all of our past shows, both on cable TV shows and on here on the radio as well at realestateshoworegon.com, or also on YouTube /Real Estate Show Oregon, and you'll find all of our shows there. Well, we're talking today with Guy Giles from Bank 34 Mortgage and Brad Bennington, the CEO of the Southern Oregon Builders Association. And now, by the way, at the end of today's show, we're going to have Brad going to give you an update on what's going on coming up in September with the tour of homes that the Southern Oregon Builders Association will be doing. And Brad's getting ready for that as well. So there's a lot going on there. By the way, in case you think that we don't talk much about foreclosed properties, you'd think there just aren't that many out there being sold. But I will just tell you, if you are in that, especially if you're a first-time buyer or an owner occupied of a home, a foreclosed property, homepath.com is the website to go to, because they post them there, and that's where they go first. So these are Fannie Mae and Freddie Mac foreclosures. So check that out if you're looking for that. Okay, so Guy, you were at the Economic Forum this week from the National Association of Realtors and by the Rogue Valley Association of Realtors sponsored there. Statistics, he gave you a lot of national stats. I want to see how we maybe compare here in Jackson, Josephine County, some of this stuff.
Yeah, I think it is kind of interesting. They talk about it being either a buyer's market or a seller's market.
Yeah.
And if it's in between, they consider that about a 5 to 6 month inventory, as far as, if every house fell off right now and they quit listing them, how long it would take to sell them all.
Uh-huh.
And nationally, I think we are, bless you.
Sorry about that. Anyway, okay, what is it nationally?
Nationally, right now, we're at about 4.8 months.
4.8 months, and that is the total of a month's supply of inventory, correct?
Yes.
Nationally, 4.2, you said?
4.8, yeah.
In Jackson County, it's 2.2.
Wow.
So if a normal market is 6 months, you can see why we call ourselves a seller's market here, because we have a 2.2 month supply of inventory in Jackson County, which is down 40%, by the way, from a year ago. Is there any question as to why we're seeing what we're seeing in the market? No, I mean, it's there. What else you got?
I don't know. I was looking at some older statistics. I just wrote down a couple of notes while I was in there.
Right.
And in 2011, it was a 12-month supply. So, I mean, it just kind of shows
nationwide.
Yeah. I mean, but we still have people coming in all the time, calling up saying, "Hey, I saw this house on Zillow. You mentioned a couple minutes ago foreclosures, and some poor guy misses a payment 3 months ago, and all of a sudden it shows up on some of these websites as a foreclosed property." There's just not that many of them out there right now. As far as I'll get phone calls saying, "Hey, I want you to find me a foreclosed property," or I don't obviously sell real estate, but. A lot of times people come to me first, and you need to go find a good agent.
And by the way, what's happening on a lot of these foreclosed properties is you just don't go put an offer in on it and here it is. is that many of them are turned over into auctions, and you have to bid online or go online for these to make offers. You have to have agents to do this. It's really become much more complicated, I think. Don't you think, to buy a foreclosed or short sale property than it was a few years ago?
Absolutely. I can't imagine negotiating any of this stuff without a good agent.
Well, you don't negotiate almost with some of these foreclosed properties.
Yeah, and I mainly mean just negotiating the whole process.
Yeah. It's a nightmare.
Even if you're the most savvy buyer in town, you're probably a person that bought a couple houses in their lifetime.
Yeah, and if you're looking for a foreclosed property that's owned by a bank, they're going to add a 5% buyer's fee to you on top of it all. So it's just really difficult. It's very difficult to buy right now a foreclosed property.
And the other piece of it is, you want to have somebody that can recognize what, on that house, what could possibly get called out on an appraisal. Because if it does, the bank is not necessarily going to pay for any repairs. They might. I've seen it happen before, but you also have to be really careful to make sure you get in. Well,
they might give you an appraisal, and some of them might do a home inspection. Some of the old days back with the old HUD homes did those kind of things, but man, those days are long gone. The other thing that we're telling you why we continue to say it's a seller's market, the available homes per buyer. And, a year ago in Jackson County, we had 5.2. Think of how many times you're out buying a home and how many homes you're going to actually go in and see. I mean, I was with people, we'd take them 15, 20 homes sometimes. The available homes per buyer in Jackson County is down 30% from a year ago to only 3.5. So that's why we're seeing multiple offers on some of these properties. Joe was involved with a deal, had 5 offers in the first 2 days that the property went on the market. So it's just kind of still crazy.
I had one where they went in last week, $10,000 over asking price, didn't ask for any closing costs, and still they ended up losing out on the deal to somebody that I don't know what they came in with.
And some of the offers that have been put in there are wonderful offers, and they're still not getting them because of this kind of situation that we're in. Well, the only way to get out of it is you got to get more inventory because it's a supply and demand market. And right now, demand is outstripping the supply. Brad Bennington, you've got, before you get out of here today, tell us and give us an update on the home builder, on the Southern Oregon Builders Association home tour coming up in September. You're going to do it for the second year, and I know that you already got, you got people lined up already for this thing.
Yeah, last year we had 15 homes. Right now, we've already got 20 homes signed up, 10 more commit. Yeah, so we're going to be at least twice as big, and we might even be up to 40 homes by the time that we get there. But it's a wonderful event. The public loves it. The builders love it. It's a lot of fun. The map's going to be in the tour guide published in the newspaper. Hit our website. Yeah. It's a wonderful, wonderful event, and everybody just loves it.
40 homes. Could you possibly? I mean, is there that many unique places out there that you can actually put on a tour like this? Really?
Yeah. As you know, and as Guy knows, builders really are about half artists, and every home has a little bit different personality, a little bit different flavor. We've got homes all the way down to 1,300 square feet. We've got beautiful custom homes over 4,000 square feet. We've got them up in Innsbruck Ridge. We've got them out in Summerfield for Mahar Homes. I mean, we've got homes, literally for any budget, for any type of family, for empty nesters, for big families. You name it. You name it, you're going to see it.
Well, that's coming up in September. 2 weekends in September, right?
2 weekends in September. It's going to be the 16th, 17th, and 18th, and the 23rd, 24th, and 25th.
That's going to be amazing. I can't wait to see that. Yeah. You're right. It's gotten bigger and bigger, and so good for you. It's a great thing.
So I just want to say that it's Memorial Day weekend, and thank you for all of our military men that provided their service. My dad's buried over at Eagle Point National Cemetery, and I always matter of fact, I buried my dad Thursday before Memorial Day 14 years ago, and he's up there in Eagle Point. So God bless all of our service people.
All of our service people. My father too, and my son served as well. So it is Memorial Day, and God bless our friend Bill Meyer as he moves this weekend. All right,
what a rugged, manly man.
That'll do it for the Real Estate Show. Guy for Guy and Brad, Pete Belcastro. Have a great week, everybody.
You've been listening to the Real Estate Show on KMED AM and FM radio, presented by John L. Scott Real Estate of Southern Southern Oregon, along with All Cities Property Management, the Home Builders Association of Jackson County, DiTech Mortgage, the Jackson Soil and Water Conservation District, and the Rogue Valley Association of Realtors. For guest information or to watch a past show, visit us online at realestateshoworegon.com. Join us again next weekend for Southern Oregon's one and only real estate show on KMED.